Hello, everyone. Welcome back to my channel. So in today's episode, there's a lot of economic data that is coming out this week that is really getting investors on Wall Street nervous. So before we jump into this video, whatever I say in this video should not be considered financial advice. I'd advise you to do your own research before you buy any cryptocurrency. So on Wednesday, we had the US JOLTS job openings and they actually missed. So they were estimated to come in at 8.1 million and they actually came in at 7.6. And prior to that was 8.18. So obviously you can see that the economy is starting to slow down. Also, I see here, this is the summary of the August ADP job report. So the US economy added a lower than expected 99,000 jobs in August, as the ADP missing forecasts for a gain of 122,000. That is the lowest monthly total since September 2023. That follows a downward revision for July, which added 111,000 jobs compared to the previous report increase of 122,000. That is a downward revision of 11,000 jobs. Key takeaway, the weak ADP payrolls report adds to evidence of the slowing labor market. Calls for a 50 basis point rate cut later this month will grow stronger as cracks begin to emerge in the economy. So also I've seen that there's a large downward revision may be coming for the US GDP. So the difference between real GDP and real gross domestic income reached a record of 616 billion. GDI measures earnings by all participants of the economy, while GDP measures the value of the total economic output. Historically, GDP has been a leading indicator of final GDP data revisions and the unemployment rate primarily near the end of economic cycles. Currently, GDI suggests that real GDP should be overstated by a whopping 600 billion or 3%. However, by the time revisions are made, attention for the current GDP numbers have shifted. Downward data revisions are the new normal. So basically with all this economic data, basically a lot of it is coming in and has to be revised. So this is signaling that maybe the US is already in a recession. Also, we have the 10-year and the 2-year yield is back to the zero line. So we now see that the 10-year and the 2-year yield is back to the zero line. The inverted yield curve is one of the most accurate recession indicators. The longest inversion prior to 2022 was 16 months. The current inversion is 24 months. So basically what an inverted yield curve is, where the rate for a 10-year bond would be lower than a short-term 2-year bond. So this obviously doesn't really make sense, because if you lock up your money for longer, for 10 years, you'd expect to get a higher rate. But usually when this occurs, this usually is the biggest signal of coming recession. And usually the recession doesn't come till after it uninverts. So obviously this week now it is uninverted. So is there a recession looming? This is what investors are worried about. Also, we have, so the Fed, a 50 basis point cut in September is now priced as more likely than a 25 basis point cut. So we also have the Fed 50 basis rate cut in September is now priced as more likely than a 25 basis point cut. Now, usually when the Federal Reserve start cutting rates, usually big money market funds and investors like when the Federal Reserve cuts slowly. So that way they don't have to move their money around in a panic. But now if a bigger rate cut is priced in, so this is making investors think that the economy is doing a lot worse than what the government is telling us. Along with this, we have to take a look at what big money is doing. Now, I remember seeing this post a couple of weeks ago. Warren Buffett's Berkshire Hathaway sells 50% of its Apple holdings. He nearly sold 86 billion worth of Apple shares. Berkshire Hathaway now holds 277 billion in cash. So Warren Buffett is probably one of the best investors of our time. And if he's sitting on lots of cash, he's definitely expecting a recession. Don't get me wrong. Obviously, we want rate cuts, but usually when the Federal Reserve changes its monetary policy and starts cutting rates, big money market funds and hedge funds will have to change their positioning and would change their investment strategies and obviously sell off some stocks to go into other different investments. And usually when this happens, you do see a big lull in the stock market. Now, tomorrow is also a very big day. So we have the non-farm payrolls, unemployment rate, and our average hourly earnings. So tomorrow is a big day, and it will let us know if we will see a 50 basis point cut or just a 25. So I expect there to be massive volatility in the markets tomorrow. So also I seen this during the week. So this was an interview on CNBC. So Tom Lee is probably one of the biggest Bitcoin bulls. But he's also a hedge fund manager. And he's also stating that he is expecting the next couple of weeks to be rough for the stock market. So we'll just have a quick look at this clip right here.
September's not great, and we know, I mean, we always make lows in October, or we have many, many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. When the market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election. But
because there'd be more production, bad for price, which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realized the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity, and the prices were high because it's harder to drill with and the LNG and everything else that the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's probably
that's China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think, but it's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but this is a strong market.
I do feel that Bitcoin will probably start to put in a bottom. Now, you have to understand that we did go through massive selling over the past 6 months. So we had the Mt. Gox. We also had the German government selling plenty of Bitcoin. We also had the American government also saying that they were selling Bitcoin, and also Grayscale and Genesis. So we've been through a lot over the last couple of months. I do feel that Bitcoin might make some lower lows. So I will tend to trade very cautious here. So we just take a quick look at Bitcoin. So as you can see here, we are miles away from the 200-day moving average, as well as the bull market support band. And if we just zoom into the 4-hour chart, as you can see here, it's losing this this key trading range here. So this is obviously not too good to see. Now, as you can see, if we just zoom here, you can see that it is starting to make an attempt to get back into this trading range. I don't know, there's lots of uncertainty in the market. I do feel that Bitcoin is showing plenty of weakness here. I would not be trading it or throwing on any leverage trades. And as we can see here from the Bitcoin ETF flows, there was a huge outflow today of over 211 million. This is even before BlackRock has even updated their numbers, so there could be even more. So I did put out this tweet on the 18th of August. Would you be prepared for a 44K Bitcoin? This is just pretty much a fractal that I copied here, and I just laid it on here, and it just brought me down to 44K. Now, I do believe this could be a strong possibility. Just moving into the next 2 months, we have lots of uncertainty in the markets, especially with the uninversion of the yield curve. this usually does signal that there is a recession looming. And especially with all this economic data that's coming this week, it's showing that the US economy is just not in a good place right now. So also more news, Trump's odds continue to rise. So this is on Polymarket. So as you can see here, he's now up by 7%. So he's coming in at 53, while Harris is at 46. Overall, as being an investor and in crypto, I do believe that, try not to be too political on this channel, but I do believe that Trump and his administration will be far better for cryptocurrency in the long run and moving into the next 4 years. I also seen that Trump and his two sons are creating a crypto exchange, and they plan to launch it next year, and some kind of a DeFi protocol that's going to be launching on Ethereum. So this is obviously very, very bullish moving into 2025. All eyes on the election coming in November. Some other news, Justin, Mt. Gox ex-CEO, is launching a new crypto exchange. So some good news. So breaking, Jim Cramer turns bearish on Bitcoin and crypto. And if you're new to the space, you will know that Jim Cramer is the best inverse indicator when it comes to Bitcoin. So anytime he turns bearish, the price usually pumps, and anytime he's bullish, the price dumps. So it's nice to see that he is bearish. Also, some good tailwinds on the horizon. So FTX is set to start returning 16 billion to creditors in Q4 of 2024. These funds mainly belong to degens, could spark a market frenzy if released in stablecoins. Unlike the bearish Mt. Gox distribution with in-kind payouts, FTX USD repayment might ignite a bullish surge. So yes, this is coming in Q4. So with 16 billion going to creditors, that is quite a lot of money. And I'm sure if you were one of those people and you got repaid out, where are you going to put that money if you're already invested in cryptocurrency? So overall, I would trade with caution the next couple of weeks. That's why I titled this video, price may get worse before it gets better. But after the election, I do believe that we will see some nice price action in Q4 of this year and moving into 2025. So that is your video. If you got value out of this one, please go down, hit the like, hit the subscribe, and I will see you in the next video.